Now, Nedbank has made significant progress in transforming its retail business into a client-centered and aspirational bank for all since the start of its fundamental repositioning in 2010. Ingrid Johnson, Group Managing Executive of Retail and Business Banking, joins us now for more. Ingrid, take us a few steps back first, before we understand the changes that you've made. Take us back to 2010 and the reasons behind the turnaround, maybe in the image of the bank.
Good afternoon, and it really was quite a challenging time. If you think of the global financial credit crisis and the turn in 08, South Africa had challenges. And when you look then at our retail business, as Nedbank, we've always been challenged in retail. We've had stronger wholesale businesses, but in our retail business, we've had stops and starts, divergent strategies, and probably in the 90s did some serious damage in terms of perceptions where we forcibly moved clients and decided their worth. We chose that either you go to People's Bank or Nedbank, and that was immensely damaging. So we were really positioned as a bank for the more affluent and elitist. And so when in 2009 the issues happened, we never had sufficient transactional banking earnings to actually protect us as a buffer for the elevated credit losses. And then we also had issues in the risk environment where we actually got our risk materially wrong. And unfortunately, what you grant today, only actually you get the experience in 3 or 4 years' time. And so that was devastating, and we had a loss in 2009 of 27 million rand. And so it was an opportunity to step back. I was newly appointed in October 2009, and take the opportunity to say, so now what do we do? And I had the privilege of turning my back to the organization and create an ideal future of what would we like to be, and what are the differentiators, and importantly, how do you compete in a very competitive market where Nedbank wasn't even in the game? And so how do you actually shift perception? What is your positioning, how are you differentiated, and then the choices and the strategic intent. And so we actually crafted a very detailed turnaround plan that we've been executing on for 4 years.
Who did you target? Who were the weak spots of the competitors?
So I think that we've got formidable competitors, and I think what we had to do was say, well, how do we compete? And the one area where the competitors hadn't necessarily taken ownership, where Nedbank is strong, particularly in the wholesale environment, was around being very client-centered and delivering a distinctive client-centered banking experience, and that you choose. If you go into a store, we don't say, well, you can't have the Levi jeans, you can only have True Religion, or vice versa. You choose. And so what we've positioned ourselves is the client has aspirations and financial goals, and how do we position ourselves that when you walk in store or online or in the contact center, we are available to give you whatever you would like to choose, and actually partner with you through your life cycle.
One of the influencing factors that contributed to that loss back in 2009, if I'm not mistaken, was the issue around mortgage originators. And in your statement today, you mentioned that you've implemented right risk management discipline. What is that, and how does it work?
So this was a fundamental change to our entire business of home loans. So if you look at the industry at the time, very strongly fueled by mortgage originators that then actually gave all the banks, a choice of applicants. So a lot of froth, but not necessarily always of good quality. It was higher risk, you're paying for the privilege. And so you've taken a product that was high risk with a lot of downside as the cycle turns, and you've translated it to a commodity. And so we were all competing on the same dimensions of turnaround and price. And so what we had to do was step out of that and say, actually, you know what, it's not about market share, it's about quality, it's about building a transactional relationship with your client through their life cycle. And home loans are important, but they're not a lever to attract the transactional banking relationship. But if you don't do the home loan, you will lose the transactional banking relationship. So what we then did was, again, and this was courageous because it was at odds with how the industry was operating at the time. And in fact, Nedbank had chosen not to deal with originators in the early 2000s. The problem then was we never had a compelling alternative. So what we looked at was two very important things. One was actually what is our compelling alternative for clients, so that when they actually have a home loan, they actually know where to come to, and we make it transparent and easy to access. And we've got an online channel now that we actually have 10% of our intake through, and we'll turn around the answer within hours. Average turnaround time is 8 days. We are 8 hours.
Average approval?
Approval. So
average
rate.
Approval rate?
Rate is
what?
8.
What percentage?
Oh, it's quite low. You're sort of below 20%.
Below 20.
Yeah.
Just on the mortgage originators.
Just on the back. If you can,
sorry,
yeah.
we're running out of time.
Okay.
With the mortgage originators, how much were they charging you?
It's like at peak 2-point-something%. It got dropped to 1.4%. Still too expensive.
So you decided you're not going to deal with these people anymore. You lost clearly all of their business.
Well, we do some for our own Nedbank customers.
Mm-hmm.
But it's not, and it's transparent, and our clients pay for the privilege of using an originator.
How quick has that turnaround been in being able to build up a sufficient volume of applications?
So the other opportunity which was undertapped was the strong wholesale relationships we have with clients, as well as the businesses, the households, their key individuals and employees. So we've unleashed our business banking clients to actually do more of their home loans, as well as in having a compelling alternative to clients that we advertise. And we actually tell them about things that banks don't tell them about. Like the best place to save is to put your surplus money into your home loan. And then the other key imperative of turning around the business was actually getting our granting strategies correct of who we lend to and making sure that we had adequate provisions and address the defaulted
Ingrid,
loans.
we saw the big disaster at ABSA was on their home loan book. Have you avoided that kind of a problem?
Totally. We took action in 2009. In October 2009, we looked at the models that were driving the coverage, ratios and provisioning, totally inadequate. They were backward looking, and yet you're realizing your defaulted loan in the next 18 months. Because you can't hold these loans on your books for an extended period.
So you're in good shape now and
Absolutely.
looking even stronger into the future?
We took the pain in 9 and 10.
Looking stronger into the future?
Undoubtedly.
And as far as the retail side or the retail and side of the Nedbank business, you started off by saying you've always had a problem there, which we know. Is the problem now over? Is this now going to be a jewel in the crown?
We hope so. We have worked tirelessly for 4 years to actually change that client experience, and we've got 2 million more clients actually banking with us than we had 4 years ago. The level of cross-sell is much deeper. The quality of clients that we've gained, we've actually grown in the last 3 years 2.8 billion rand of additional revenue for non-interest revenue.
And that wasn't in unsecured lending?
No, actually exclude that, we grew 12.8%. And I think the client experience, I've just got a visual. This is how you used to experience Nedbank. If you wanted something, we'd just pummel you with a whole lot of paperwork. Now we say, how can we make your savvy life happen? One simple brochure. And it's
You're
all
a great marketer as
How
well,
much are we
Ingrid
spending
Johnson.
on that?
Thank you for coming through and telling us a little about the Nedbank